Thanks for joining me, gentlemen. Today, the story we're going to be discussing, I'm sure you'll have some interesting insights on it, is the surge in new home construction. New American homes jumped 21.7% construction in May. That's on building single family homes, meeting strong demand from buyers. Housing starts rose to 1.63 million annual pace last month, and that's from 1.34 million in April. So a big jump there. Uh, the construction pace of single-family homes rose 18.5% in May, while apartment buildings rose 28.1%. Builders were reported to be the most active in the Midwest. And let's see what else we have here. Builders also reported they were feeling upbeat, so optimism is rising. The housing sector broadly appears to be healing remarkably fast after a shock to affordability last year with the rise in 30-year mortgage rates. So it does appear that things are maybe adjusting to financing conditions. Good news on the home builder front. What say you?
I think it is good news. Sorry, Zach, I cut you off. Back to Zach and his natural light.
A
But
little
no,
giggle from me.
yeah, no, I mean, look, I think it's kind of interesting. One of the same. I'd like to say I know as much about the Midwest as I do about the Southeast, but I don't. But the truth is that if you look at Florida, in my mind, what I think is um, it's nice to hear that there's more coming out because I think really what we've had is stagnation due to lack of product or lack of product that people want to buy. And that's also increased by the whether or not it's affordable. So I think if new product is going to lead to more increased purchases because people want to own.
It's interesting. It sounds like you listen to some smart guys or a smart guy, that might have some opinions or some information for you. Well,
I mean, I'm talking
we
about
might.
Florida, but
Oh, I know. I'm just thinking we might have to have one of these experts come on and talk one time.
yeah.
So
Who's that?
uh, well, we'll have to drop some names next time we have some speakers. We'll figure that out. We'll let everyone know. But the optimism that you're talking about, Steve, that's um, a leading indicator as far as I'm concerned. And real estate has always been a leading indicator. First, it starts with interest rates, and that usually is the worst thing that happens to us, and that shuts everything down. I mean, banks have been closed; we can't get loans. Everything stops in its tracks. People stop buying houses. So when you see a reverse of people throwing their money in, putting the money where their mouth is, that is what I would probably guess is the turning point. Now, keep in mind, though, this says in the Midwest, there's not a big geographic pinpoint here. So you got to take everything with a grain of salt. But housing starts usually leads to deliveries 9 to 12 months. So that to me means that there's probably a little pain from here till then, but it means that most likely the worst is over. And you peg a recovery that probably starts sometime end of Q1 or Q2 next year. That's very promising for real estate. And to Jeff's point, you're going to have a lot more supply to meet the needs and the desires of the demand, which you're not seeing today, regardless of the pricing. I think the
Steve,
pricing is moderated, and you'll get to the point where you finally have that supply and demand starting to find equilibrium. That could be the next catalyst for a bull market in real estate. So I'm excited.
Yeah,
yeah.
I think also this kind of goes to one driver here, something we talked about previously, and that's the higher mortgage rates in a way creates an incentive for supply not going in the market in terms of people who already have low fixed rates just staying in the home they have rather than buying a new home. Well, that kind of constrains supply. I think another development we have too is millennials. Starting to get to the point where they're looking more at home formation. So we've got a large generation that is going to be supportive, and that should continue for a while. When you look at the data also, there was a real pullback after '08, and I think we're still dealing with a bit of a supply shortage. And then these are national numbers, and I think sometimes people get a little too focused on some of the headline numbers for, say, downtown San Francisco or how prices have pulled back in Austin or whatnot. But when you take a look at the national picture, I think it's generally positive. for residential homes. And I would also argue so positive that it makes the likelihood of a severe recession pretty negative because housing looks like it's going to stay fairly robust, even if we have other problems in the economy that really should help. Even if we do get a mild recession, things not to get too bad, and to argue for a fairly strong supporter of economic growth in terms of what we're seeing from the housing sector.
Well, I think it's kind of similar to most things that we end up discussing here is what's the context? What are the other factors that are coming into play? Zach hit on one, which is says Midwest, doesn't really pinpoint where. I'd also add, what do pre-sales look like? Are they doing these on a pre-sale basis? Which will be I mean, in my mind, kind of one of your leading indicators of people going out and buying stuff. And you hit something else that I thought was kind of interesting, and maybe I'm just looking at it poorly, but millennials, like the word or not, they like to be independent, like to move, whatever. The truth is, at some point, if millennials are starting to have kids, they want to drill down some roots. And what's the best way to do that, without rising home costs continually year over years to buy something? So, I think there's a lot of factors that come into play that, we don't necessarily know the whole picture, but I think it is positive. I think, I hope that trend continues, throughout the country, not just the Midwest.
Yeah. I would point out one other thing, as I guess I'm on the cusp of millennial, I think, right?
Oh my.
Yeah, sure you are. I might have more gray hair than you, but that doesn't necessarily mean that we're in the same generation.
Right.
That being said, one thing I found through the pandemic, especially with lockdowns and wanting a little more distance, was more space. And so as I'm getting wiser in my years, and as you put it, drilling down some roots, I
Yeah.
would like those to have more space, which means homes.
Yeah.
You're not in apartments or townhouses. So that trend should continue and could continue for quite some time. Because the millennial generation, we're at the beginning of it in terms of the high end of the age range. Um, you got like a good 15-year run there of people that are going to then go and follow in our footsteps and do everything. So you could have a long runway there.
Yeah, I would also add there that the remote work trend, even if it's just hybrid, where you're spending 2 days out of the office, argues for larger homes. You want more space. So,
Yeah.
along with family formation, the prospect of people wanting a home office, and then another thing
Storage.
I think we're also seeing is as people get older, a lot of people aren't looking at moving into rest homes or retirement homes. A lot of people are looking at aging out in their home.
Yeah,
Uh,
Yeah.
sure.
so I think there was in the past, there were a lot of naysayers who were, especially after what happened in '08, that were pretty negative in housing. And I think most of the people really understand the market and look at it now, see a lot of positive drivers nationally. Now, there's always some local markets that are going to behave differently, but I think nationally the picture is pretty positive for new home construction over the years ahead.
Well, shooting from memory, and you just kind of hit something maybe that makes this a little bit more feasible for what you're saying is, rates today, even though they've gone up dramatically from what they were previously, let's call it the threes, even five or six, five, sixes, sevens. Truthfully, you're still talking rates weren't too dramatically different, before the Great Recession than what they are now.
Yeah.
So, it's just looking at it through a different lens and saying, well, people were used to 3%. 6 and 7% isn't really unheard of historically.
Yeah.
No, I agree.
So,
Good points, all. Thanks a lot. Welcome, gentlemen. Article we're going to be talking about, new development here, is the trend of office to industrial conversions. In a report earlier this year, Brokerage Network found that 15.2 million square feet of offices nationwide have been converted to industrial use. That's a 33.7% increase in just 2 years. At the end of 2022, the firm found U.S. vacancy average for industrial properties was just 3.8%, and that's versus 18% for office property. The study found that a majority of the 15.2 million square feet was new construction of buildings designed for storage, built in the wake of teardowns of office stock. This is a reversal of a trend that dominated the 90s and early 21st century of conversions of old, obsolete industrial buildings into offices. So we're now starting to see things move in the opposite direction. Your thoughts?
Well,
You want to take this, Jeff? You want me to go first?
go ahead.
My first thought off the bat is the buildings that were converted in the 90s to office were dilapidated and abandoned because there was an oversupply. And you're seeing a reversal of office back into industrial as a quote unquote oversupply. I would disagree. But the biggest thing that I'm seeing is that when there's a trend, the pendulum swings too far. So we personally have not looked at storage deals, and a lot of industrial deals. It's too saturated. There's too much supply, and the more you add to it, the worse it's going to get. What that's not pointing out is the trends of the rents and the trends of the vacancy rates at those industrial projects. And I can tell you, rates have come down, and you can't increase them, and you can't maintain them, and vacancy has started to creep up. A lot of lenders have kind of shied away from industrial for that exact reason. The people that know the best are the people with the deepest pockets that can have access to the most money and do the most research. And if they're staying away from it and we can't even get a loan from it, it's not looking like it's the best place to park some money right now, at least from where I'm sitting.
Yeah, I think also in this article kind of pointed at this without calling it out directly. A lot of this really involves older, rundown offices where somebody's looking at the decision of, do I put a lot of money in to revitalize this or tear it down and put up another office? And they're just coming to the decision of, you know what, I'm just going to convert it into into industrial because that's the hot space right now. But this isn't really a trend of taking like, really high grade office properties and going in there and turning it into a self storage center.
Well, look, my comment where I was going to start is, is not where Zach was, but I do agree with the sentiment. But I do think it's kind of interesting from the concept of office to industrial and urban infill. Where somebody is a manufacturer or light manufacturer wanting to come into a space, maybe it is interesting, but that's a very difficult transition because you're talking about vertical, and most industrial needs horizontal, not vertical. So it really sounds like it's really going to be stuck to suburban. And maybe it does help dilapidated, suburban former offices to their former glory or to some former glory, but truthfully, to what extent? I think, Zach hit the nail. Industrial is burdened with low cap rates and rental rate reductions. That's a problem. There's not that much manufacturing that's going on in the United States from that, at least from what I see, to fill all of that industrial. I mean, I think Zach and I had tried to look at a couple of them a few years ago, and they were big brand names that were 400 or 500 million square feet industrial properties, kind of suburban areas that we just couldn't wrap our heads around because what are you backfilling with?
That's kind of the biggest thing that you find is a lot of the area that this happens. I mean, the well-located product is not disappearing, to both of your points. The less well-located product or the product that's been neglected, converting it does make sense to some extent. I don't know if it is a pure industrial conversion more than a mixed use or a residential or some other retail or support logistical. But Jeff, you're right. There's not enough manufacturing that can take all that space. There's already a plethora of storage, and you can only have so much storage. There's only so many people with so many things to put to so many places. Some of the stuff that we saw when they call it industrial, that's a misnomer. It's actually flex space, and it has a lot of office in it. They just like to call it industrial because that's a hot keyword, it's a buzzword. Case in point is the science and technology, research parks that they classify as industrial, but are really their office.
Yep.
And people are going in and they're doing manufacturing, they're doing R&D, stuff like that. And even that's become too saturated at this point. I think the conversions, again, the pendulum swings too far too quickly. You're going to find a lot of these projects don't make it off the ground, and a lot of ones that already exist are going to suffer for it.
Next article we're going to be talking about is Buy a House, Get a Gold Bar. This is out of China. So, a Chinese property developer is offering free gold bars to home buyers in a bid to boost home sales. The campaign has since been suspended. Multiple buyers are saying they're experiencing a month-long wait for their promised gold. Now, this is reportedly the Hufang Group, based in Hangzhou, China, and eastern China. They've been offering around 2.2 pounds of gold. That's worth about $66,000 for the purchase of a 1,000 square foot apartment that has a price range generally from a bit over 300,000 to about 350,000.
So why not just give a price discount?
I think that's probably a commentary on how Chinese feel about their currency.
Well,
Because
how about
yeah.
they upgrade the real estate? I mean, I'll take that gold bar and I'll, maybe put some pipes and some electric, some smart home features, Maybe I'll make it 1,200 square feet instead of 1,000.
Well,
You
that
know?
again is also now I don't know about these particular developments, but sometimes in the Chinese market they actually don't put all that stuff in because there's a taboo
Yeah.
about
Pipes and
buying.
electric.
Yeah,
So
yeah,
that's
because
great.
there's sometimes a taboo
The feng
about buying
shui.
something that's kind of been developed or built for somebody else, and they'll want to sometimes tear that out. But in terms of the pipes and electric, sometimes these properties are never really actually envisioned having somebody live in them. They're bought as purely investment properties to move from one buyer to another. So there's and maybe we'll cover this later. There's the stories about Chinese ghost cities where you drive and there's a place of very affordable land and there's high rises and malls and it's all empty. It's all there for investment purposes, being able to hold the asset, sell the asset to somebody else, but never actually. I know it's bizarre. The Chinese property market's a little bit different than the U.S. market.
Bizarre. I can't wrap my head around what's the inherent value if it's always vacant?
The inherent value is there's been essentially a guarantee from the Chinese government that the value won't drop, that they've always come in and supported the property market
So
and
here's
done
a bar of
bailouts.
gold because the government can't support
Yeah.
their currency.
Here's the bar of gold. That's good. Can I get it on
Yeah.
deposit at a casino in Macau, and then I'll sell the apartment to somebody else? I'll just pick up, 60,000 of gambling.
Yeah, I think they have kind of. I would need to research this. They may have cut down on the gambling a bit as a vice. It is
Oh,
a much more
good.
tightly controlled. So if you're a Chinese citizen and you want to invest in something, you're really restricted. And we actually did a previous piece on the money laundering aspect of how the drug cartels are with Chinese organized crime
That's true.
to allow Chinese to buy U.S. real estate because they're restricted in moving money out of the country. So this is
So it's a constant Ponzi scheme for China.
yeah, real estate really has become that as well as
Sure.
a job creation scheme, right? It's a way to create a lot of construction jobs, keep people employed, and then it's also been a way to have citizens and municipalities fund those jobs in return for some safety in terms of investment returns with kind of not an explicit but kind of an implicit guarantee from the Chinese government that and there are concerns that this can't work and last forever. But
Well, I kind
so
of said that
far.
tongue in cheek, but as you know, as you kind of just said, it's kind of interesting. I hate to be the kind of the bad guy here, and I don't mean this disparagingly to anybody in China, but it sounds like you're kicking the can down for a greater problem, kicking the can down the road for a greater problem, a greater hurt, because you're
Wait. Who
unwilling
does
to,
that sound like?
all of us.
All of us?
I mean,
Let's
theoretically,
I mean, all of these rounds of support from the government that, didn't
That's what I
lead to any
mean.
kind of inflation, that we just move it down the road and make it someone
Yeah.
else's problem. I got it. Well, Jeff, I was going to ask you a different question. You and I have both built things, right? And Steve, to an extent, you've been involved in real estate and development too. When we go out and let's say you do a $50 million project, we're not writing a check for 50 million bucks. So we got to get a bank and we have investors and everything else. We got to put a budget in front of them. What do you think someone would say if they saw a budget that had a line item that just said gold? Do you think we're going to get funding for that project?
I venture to say that it doesn't say gold other than on a closing statement. It essentially says house at 500, buyers credits, debits, whatever has a monetary amount that's also in the line item says gold. So
It says gold. So there's a budgetary line item that says gold. I got to go out and buy gold to give to people.
So I think to your point, so if you're giving gold, but here's a better question. What if you're the buyer? Is your value based off of the value less the gold for your LTV, or is it the value which you bought it and you get to keep the gold?
I'd venture to say it's the value of what you bought it, and the gold was, like a parting gift.
Yeah. Yeah. A little bit better than open up a bank account, get a free toaster.
I don't want
But
to open a bank in China. Let's just put it that way. I feel like you just kind of screwed yourself there. Other than maybe you get a couple years of debt service out of that $60,000.
yeah, I think this just kind of goes to it's kind of a fun article for us to talk about a very different property market in terms of what's going on in China. Very, very different. And market maybe isn't even the right word since there's so much government control over it. I don't know what you would call it. A free market, you definitely wouldn't. But I do think, in all seriousness, it's maybe something we talk about a little bit more in the future, just from the aspect of China's role in the global economy and any fallout we might see from that more broadly. Maybe that's something in the future. There's a little bit more of a serious point right now, but I think the more interesting point is that there has been enough weakness in terms of the Chinese property market currently that a developer felt the need to offer bars of gold to move some units.
Yeah, I think that
Fun.
says ailing housing market is really
Yeah.
what the title is.
All right, gentlemen. Another news article that we'll be touching upon is changes in the Miami market. There's some commentary about it becoming less affordable. At the same time, it's still a price bargain compared to other markets, and we're still seeing movements into that market. So, on an affordability basis, when you look at the incomes in the market, it's now become one of the least, if not the least, affordable housing markets. On the other hand, when you look at it, say, for somebody living in Manhattan considering moving there, and the price break and the tax break and the living cost breaks they're going to get, Manhattan residents say with a $650,000 salary is looking at saving almost 200,000, 195,000 moving to Miami, thanks to the lower prices, cheaper taxes, cheaper living expenses. So we're still seeing, even though it's not as much 2021, saw 62% more people moving into Florida than out. Uh, and that's according to United Van Lines. In 2022, that dipped to 58%. So far in 2023, it's running at 56%. So even though prices have come up, and there's certainly challenges for affordability for Miami residents, we're still seeing a very strong draw to Miami. And we're still seeing a lot of incentive for people, whether it's Manhattan or San Francisco or Chicago, some of those more expensive urban markets to move. Jeff, Zach, you both spend a fair amount of time in Florida. What are your thoughts?
Well, sorry, Zach. Go ahead. If you have a point, go ahead.
Oh, my point is simple. I'd say, I'm sorry, local Miami residents. If I can save $200,000 in taxes, I'll pay an extra 50 grand for a house. Are you kidding me? I mean, that's like the biggest bargain of the century, or
Well,
at least the
I
beginning of
add
this
to it.
century.
Actually, I'd add to it for an extra $50,000 above it. I get way more space than I had in Manhattan
Yeah, that's true. I forgot about
with a
that.
view and a yard and a
San
picket fence and a
Francisco,
dog and you name it.
Chicago, New York, Washington, D.C., you start throwing names around, those tax rates are way
Astronomical.
higher. I mean, that's why, I mean, it looks like migration trends may have slowed down. I would disagree. Maybe less people are renting vans. I know more people that are moving to Florida, not less.
Me
There
too.
was another article that was talking about it was over, I think it was 600 or 700,000 people. It was like it was close to 2,000 a day.
Yep.
It's been unbelievable what you've been seeing in the state. I mean, the savings are incredible, and you know, Jeff, to your point, I get way more space, way more bang for my buck. So my cost of living actually declines, even though I might be spending, you know, a couple extra dollars buying a place.
And I can own a car and park it. So,
That's if you want to drag.
but I mean, true. That's if you want to drive, you don't have to. I mean, but all those things add up when you start looking if you're in New York City. So, I think you kind of hit the nail on the head.
Yeah, and a drum I've been beating too is quality of life, right? And
for
that
sure.
in New York, San Francisco, Chicago, there since the pandemic, there's definitely been, some increases in crime, different sorts of crime. In San Francisco, a lot of it's property crime. You haven't seen that in Miami. Um, and certainly during the pandemic, Miami was one of the places where you could still, to more of an extent, live your life. And people, whether you agree or disagree with that, buyers seem to agree with that. A lot of people have chosen Miami as a location that they just consider a better lifestyle. And that certainly goes into like how we look at markets. We generally want to look at a market where we feel that the public policies are going to be supportive of the markets, of the property markets, of the buyers, of the businesses, whatnot. We don't make an ethical and moral judgment, but we make a business judgment. And I think when you look at this, sorry, Miami residents, but I think the trends are still there for an influx and for people choosing there to the extent that I think, you're seeing Miami more and more become a hub of international business, a place where companies want to be located, and they're looking at it as a viable alternative to Manhattan or to Chicago as setting up like a global headquarters.
Of course, you can go east. You can go east, west, north, south very quickly from Miami. In just a couple hours, you can be. I mean, what, 2.5 hours, 3 hours max? You can be in New York City. What I mean,
Well, I mean, not you, Jeff. You'd actually have to get on an airplane.
you mean instead of driving, which I do a lot? Yeah, you're probably right.
But it goes
But yeah,
back
I
to
mean,
that you're able to have a car. You know, it's not something that you're afforded in a lot of these other areas. So I
no.
mean, quality of life. It
Well,
is certainly different.
hell, the cost of parking your car in New York City is. I mean, I can only imagine that's just another mortgage anyway.
So yeah, I think that while affordability for Miami residents may be going down as prices go up, for a lot of the folks from the areas they're moving, Miami still looks like a buy. And I think this trend still has room to run.
For sure.
Florida real estate, baby.
Okay, thanks, guys.